Hello everyone, welcome to Just Invest Today. And today we're going to be talking about Michael Burry's investment strategies. And we all know who Michael Burry is. Remember, back in 2008, he short sold the housing market and he was right. He generated $1 million for his investors and for himself. And so this guy has a high reputation in the stock market. He knows what he's doing. And a lot of people want to know, what does Michael Burry do and how does he invest? And this is what we're going to do. We're going to find out in this video. Before we get into this video, can you please like this video? Can you please subscribe to my channel? And I'm going to be providing a lot of content, and please follow and put your notifications on. And today we're going to get into the video. Let's go. So Michael Burry was heavily influenced by Ben Graham. And remember, Ben Graham is the godfather of value investing. He wrote the books Security Analysis and Intelligent Investor. And Warren Buffett marvels over these two books. So that's how you know how good of an investor he was, and he was ahead of his time during his days when he was investing in the stock market. So Michael Burry talks about reading Security Analysis, and this book is all about buying dollar bills for 50 cents. So that's exactly what Michael Burry is looking for. When he's going out into the market, he's looking for these cheap companies that are unpopular. The people don't like it. People like kind of left it over on the side. And when he finds these companies that he can kind of still have a little bit of free cash flow, they still have a little juice in them, he buys them, right? So when he buys these companies, he's looking for like the management to kind of like to squeeze the juice out of it, kind of get a little catalyst going and get a little pop in the stock market, because he knows it still has a little bit of potential. So a strategy is basically buying companies with a margin of safety, and then when he invests in them, he wants the management to kind of polish them up a little bit, make them look good, so he can actually sell when they come back to life. And when he does this, he focuses on the downside. He has the downside protection, and that's his majority how he's thinking. He doesn't want to lose any capital, so that's his main strategy. No loss of capital, margin of safety. Think about the stocks that he bought. He bought Boeing, he bought like GameStop, he bought Bed Bath & Beyond. And those are so undervalued stocks. They were kind of on the last legs, but he knew that they're going to he can squeeze some out of them, and they actually grew like tenfold. So he got like a little nice gain on those shares. He's really active. He like, depends on what he does. Some stocks he's very active. Some stocks he just wants to hold. It all depends on what company it is, and if the stock has that like margin of safety, if he finds that he can still get value out of it. And that's what it's all about. Finding stocks with value and squeezing that bit of value out of those stocks. So Michael Burry has a big circle of competence. It doesn't matter where the stock comes from. It can be micro cap, it can be large cap, it can be tech, non-tech, cruise ships. It doesn't matter. He makes sure he has a broad understanding of the market, and as long as he can find value in it, he's going to invest in it. How does he determine the discount? He usually focuses on free cash flow, the enterprise value, market capitalization minus cash plus debt. He will screen through these large numbers of companies by looking at the enterprise value EBITDA ratio, though the ratio he's willing to accept tends to vary with the industry and its position in the economic cycle. If a stock passes the loose screen, then he'll look harder to determine the specific price and the value of the company. He tends to ignore the price ratios. Return on equity is deceptive. He prefers minimal debt, and he's careful to adjust book value to a realistic number. He likes to hold 12 to 18 different companies, diversified through different industries, and majority of these industries are actually depressed. And he likes to be fully invested in the market. And when he does this, it doesn't matter what it is. It can be an asset play, it can be arbitrage opportunity, it can be a long-term investment. It just all depends on the value and depends on what he sees in the market. So when Burry buys, he likes to use some type of technical analysis. He uses the analysis to determine when to buy the stock. Specifically, he prefers to buy within 10 to 15% up to 52-week lows. And he makes sure it offers him some pricing support. Michael Burry tends to sell a lot. It doesn't matter what it is. If it makes a quick 40 or 50% pop in price, he's quickly to sell these stocks. Or even if the stock goes down and makes it 50% down, he's going to sell the stock. He's doing this because he doesn't want any one stock to hurt his stock investments. He doesn't want that one blow up, and if that one blow up hurts his whole stock holdings, it's just going to be huge, massive losses. So he's quick to sell, and you can always see this when he's making investments. He sold out of GameStop, he sold out of Boeing, he sold out of Facebook, he sold out of a lot of companies, and sometimes he even buys back into these companies. So he's just really all over the place when he's making his investments. If he finds a quick 40-50% pop, sometimes he just sells it depending on the company. So if you want to follow Michael Burry's investment style, it would be pretty hard. He's very experienced and knows what he's doing. So guys, if you like this video, can you please like it, subscribe to my channel, and I'll get back to you in the next video. Peace.